Good morning, Coronado. This is Howard Lindzon, standing in for probably Katie, who's lollygagging in August, like the rest, like she's acting like a European. Hi, Howard. It's August, and all of a sudden she's from Europe, and she's lollygagging. So, unfortunately, our guest Sudhin has to take me today. Sudhin is joining us from Surf Air. And Surf Air Mobility is is after and chasing the $100 billion plus opportunity in regional air travel. Uh, Trying to get me as a customer. I am the customer. It is a market the majors ignore in favor of big hubs and long hauls. They've already built one of the largest commuter airlines in the United States, and they are in the process of layering in their own proprietary SurfOS software, plus a roadmap to electrified aircraft, which is a hot topic. The big bet here is unlocking hundreds of underserved airports, cutting operating costs, and getting a lot of people to fly a lot more often. So, entering the degenerate economy is what they want to do, which is my favorite burgeoning market. The And so joining us is Sudhin Shahani, I would say, director. We've known each other a little bit at Surf Air Mobility, and the man who co-founded Surf Air Global, running it as CEO for a full decade. Before that, he was an entrepreneur in residence at Anthem Ventures, which I know, helping back and build early stage winners, and even founded Musicane, a digital music and social shopping network way ahead of its time. A Babson College honors grad school in business and entrepreneurship. Sudhin's career is basically a highlight reel of spotting big opportunities before the crowd. So, welcome aboard.
Thank you, Howard. Nice to be here. Thanks for having me.
And where are you dialing in from today?
I'm actually in London today.
And how's the weather been this summer over there?
Well, I've been here for a few days. It's pretty boiling, but
It's hot now over there in
probably a good
London.
thing over here. Yes, it is.
What part of the city are you staying in?
I'm staying in town in Chelsea.
Oh, great. All right. Can you walk us through why the advanced air mobility market is receiving so much attention and investment? And then what's the difference between urban air mobility and regional air mobility, where Surf Air Mobility is focused today?
Yeah, absolutely. Look, I think that the big opportunity, just to sort of simplify it without a lot of the acronyms, is that all of the excitement in the aviation space and all the new technology that's being developed is around small planes. So when you think about electrification, hydrogen, kind of all of these different things, there's a couple of common themes and missions. Everyone's trying to make small planes uh, emission free or reduced emissions, but also, and very importantly, are trying to make them a lot cheaper, so that more people can actually use small planes. And these missions are small planes over short distances. So it's really the idea of getting people out of cars and into the air. Within that, kind of, there's the urban side where there's vertical takeoff and landing. Think electric helicopter replacements. And the big bet there is for them to become more prolific than helicopters did, because they're going to be cheaper, and because the idea is that vertiports will be allowed where heliports perhaps weren't. And then there's regional air mobility, where we focus, which is, if urban air is kind of 50 mile or so, 50 to 60 mile sweet spots, regional is 50 to 500, with really a sweet spot of 100 to 300 miles. And I think, as you pointed out in the introduction, one of the great advantages of regional air mobility, particularly in the US, is there's a number of existing airports. And the US has 5,000, or approximately 5,000 airports that small planes can use to do these short distance trips. Whereas, as a point of reference, major airlines use maybe up to 200 airports, of which maybe they use 30% of those at any kind of regularity or scale.
I mean, that's very helpful. So lately, there's been a lot of news around Joby, which I actually own some stock, so you can walk me through it. And we're having him on the show too. And Archer, which I don't own, in the what we call the eVTOL segment of this market. I'm probably pronouncing the acronym wrong. And so, can you tell us how surf air mobility is a differentiated opportunity in your unique approach to this market?
Yeah, yeah, absolutely. I mean, both of those companies are both, in my opinion, at least, incredible businesses doing incredibly ambitious projects and leading the charge in the eVTOL space. Their business model is is completely vertically integrated. They're building and fully certifying a new aircraft type. Uh, yeah, and their method of deployment, then particularly Joby's, is to be vertically integrated and essentially then start operating flights on their aircraft. So it's first be the aircraft OEM and then be the airline.
Yeah.
We're coming at it from a different approach where, you know, the category of airline that small planes operate under with scheduled service is called commuter. It's called a Part 135 commuter airline, to use the technical term. We are one of the largest commuter airlines in the country, and we see the opportunity to come from a position of scale where we already do fly close to 400,000 people a year across our 55 or so aircraft, separate from our charter business, where we work with 450 or so different operators. So we understand the data, we understand the customer use case, and our first approach in in the electrification side is to actually take an existing aircraft type, one of the more prolific aircraft, the Cessna Caravan, and modify it to have hybrid and fully electric versions of it, which will reduce cost and emissions and open up more route possibilities for us. So we're coming from a space of, we also are building what we think is the necessary commercial infrastructure to bring other operators into the space.
Hmm.
In building up our business, we saw the need for better software. We saw the need for kind of more efficient financing. We saw the need for various pieces of infrastructure which don't exist in this smaller charter aircraft kind of space, where commercial airlines are much better served. So we're trying to build the critical infrastructure to help all operators get in the business of regional air mobility.
And so that brings me to SurfOS, which is your AI enabled software that you started rolling out across the company. How is it being designed to help streamline your business? And then when will this technology be ready for others to use?
So what we're doing with SurfOS is bringing together, particularly for the 135 and the charter industry, the different players in the value chain that matter. So, for
Mhm.
example, if you were to charter a plane, there's a broker involved, an operator involved, and typically an aircraft owner that the operator is managing the plane for involved. We're creating technology for brokers, owners, operators, and eventually OEMs in the space. We are an operator ourselves, we are a broker ourselves, and we've been streamlining our business, and we sort of built it for our use case first. We now have rolled it out across a number of beta customers who we've been getting very good feedback from, and we intend to commercially deploy it in 2026.
And how do you see that helping? It's just a cost thing, or you're selling it also? How do you see it helping the most?
Yeah, it's an efficiency thing, which, I mean, leads to cost savings and efficiencies. We haven't yet fully defined the revenue model, but it's likely to be a take rate on the savings.
Hmm.
There's significant leakage in the space when a transaction happens. There's a lot of different pieces. A broker, for example, has to both sell to a customer and source supply. Operators have to deal with owners to figure out aircraft availability. If you can take all of those people's data, for example, and give them better decision making and better insights, and that's where we work with the software is powered by Palantir, where we have a long-standing relationship. They're a shareholder, and we work exclusively with them on this specific category, the Part 135 space for brokers and operators, to build tools for better decision making.
Hmm. And so, last thing, electrified aircraft are a big part of the future of the industry and are an important factor in unlocking the market potential for regional air mobility. And that's what, like an hour to two, or
Yeah, it's 100 to 300 miles, about an hour to two, exactly.
so where does your program stand today in how your platform works to bring these technologies to market? And how do you see this shaping the future of electronic travel, regional travel? So it's kind of like Joby's like trying to do the Tesla model, and you're working with the stacks that already exist with software and with electrification.
We're working with the stacks that exist. So we are developing. We have multiple bets. So we have our own proprietary, where we're developing what's called a supplemental type certificate, where essentially we're modifying an existing very prolific aircraft type, the Cessna Caravan. we are one of the larger passenger operators of that aircraft. So we intend to electrify our own fleet, and we're working closely with the OEM, Textron. At the same time, given the fact that with our on-demand business, we work with a number of different operators who are all potential customers, both of our software and of electric aircraft, we are working with other electric aircraft, aspiring electric aircraft OEMs. For example, we work with Electra Aero, who are developing a really interesting new aircraft type, also clean sheet design for short takeoff and landing. And we want to bring all of the winners to market and deploy them across our platform because they're different aircraft types for different missions.
That is fun. And is there something that I missed before I let you go? Is there something I missed about the company that you'd like to say?
No, look, I think one of the main things I want to emphasize, I think we've done through the course of this, is that we are really taking a platform approach where we have multiple businesses within the company, but that are all kind of create exponential growth for each other and are necessary to exist together. And our play is very much to create the critical infrastructure to bring regional air mobility forward for everyone in the space.
And where's the biggest state that you're operating in?
Our scheduled business, actually, we're one of the largest inter-island operators in Hawaii.
Mm-hmm.
And that's a perfect example of where electrification can be showcased. It's short distances, inter-island. Cessna Caravan is one of the more popular aircraft there. We see that as down the line as being a real electrification showcase.
Mm-hmm. And then second biggest market out of the islands?
So we have the islands. The scheduled business then flies a number of different routes, sort of single routes in different states around the country under something called the Essential Air Service Program, where the
Okay.
government pays us to fly from major cities to smaller underserved routes. And the charter business, while based in California, has a national and really a global footprint.
Got it. All right. Well, what a treat. It's good to see you again. It's been a while, and I'm excited to kind of share the story with the community and the extended community of StockTwits.
Thank you, Howard. It's been great to be here. Thank you.
Just chat myself amongst our people. What time does he usually show up? Hey, everybody. It's Howard Lindzon. The sun is rising. It's like I have a radio show. I'm hoping my wife comes up to make a coffee. My Lindsay, my puppy, is over there. Uh, I have a ball marker from Swag that has a Zin inside of it, so it's a great gift. This is something new. People send me stuff. People send me stuff. Here's a product, Bogey Block. So it's a one of my son's friends is doing a sunscreen for golfers. And then have you tried these? I don't think anything happens here. You tried
No,
these?
I have not.
Athletic greens in a gummy. I think I'm scammed. Um, some Adderall. These are not a scam. These work. Uh, and let's see what else. I'm like a carnival show waiting for you to
Uh,
come on.
I was just gonna say, what did I just come into? Oh my god, we were just talking
You just
about
said
future
fill the air.
pharmacies.
It's like I'm back on 1990s on QVC selling shit. Yeah, here's another thing. Anytime I go on the internet now, I buy longevity products. Here's another one called Moringa, which I haven't tried yet, a morning product. And here I am in pretty good shape this summer riding in Italy. What do you think?
That's pretty cool. Riding
Pretty
in,
cool, right?
yeah, it's pretty cool in Italy for sure.
And then I got my stuffed twits mug. What else do I got? All right, I'm out of stuff to say. Here's my schlepping hat, which I think is pretty funny. And here's my old book. I don't think it's available anymore because it's. I think they use this book to burn at like conventions and stuff. The Wall Strip Edge. And I think Katie's doing a book too.
Is she? Oh
Yeah,
wow, I
I got
did
an
not
email
know.
because she found an extra 30 minutes in a day somewhere, so she's going to write a book. She DMs me last night. She's like, I'm back. I got a ton of ideas. And I'm like, dude, I'm 60 years old. Please don't DM me. So what up? What are we talking about?
I don't know. Let's see. It's been a quiet morning in the markets. I don't think anything got really released. Honestly, it's a quiet week. Like earnings is in the awkward in between of we had a lot last week. We have a ton more next week. This week it's like meh. I think the market's just chugging along. I mean, it's crypto, to be honest. Crypto is just
Yeah,
catching heat.
Solana. I think you had a bit of a and I'm just so tied to this. Not as a, I'm a, I would call it an innocent bystander in that I I'm a derivative owner of a lot of crypto through funds. So I'm not like the guy that wants to own it. I'll pay the 2%. Um, some would say that's dumb, but um, I pay the 2%. And so Multicoin got me into, Solana in the under $1. And the reason I did it that way is I would have sold Solana at $9. And because I did it through another fund, not that maybe they're any smarter than me, but their job was to hold it. So I've had the luck of holding this. So I think I'm sticking with that strategy because there's no way I would have kept most of what I had I owned it in my own wallet. So I've treated crypto like I've treated seed stage investing. Is let the
I
manager decide.
I don't think that's anything wrong with that. I mean, you de-risk yourself while taking participation in the upside.
Yeah, no, just pay the fees.
Yeah.
So I'm fascinated by because what happens is I watch. It's like a kind of like a psychology show. I watch all these people on Twitter and stock twits, the people that I know, talking about my positions, and half the time I'm like wanting to chime in. I go, "Can you just fucking sell?" But it's really an interesting thing to see my friends who own it all having good days, and I'm like psychologically, I'm like, oh, they're way too bullish, and I'm like, so it is pretty fun. It is as an investor myself, it's fun to watch my friends and a little bit sometimes nerve wracking who I know own the same things that I do, and they're like, I think they're exuberant. I go, guys, you got to chill it out. But right now, I think the big story is Ethereum, and a lot of my friends were. I'm watching some people dunk and be happy right now because
It's a catch-up
Ethereum.
trade. Yeah.
Yeah, it was a trade that was made people look really dumb about up until about 6 months ago, and this a combination of I think some software changes, some leadership changes, the Ethereum the
Well, no, I
treasury.
think I think it's two words. It's Tom and it's Lee. Tom Lee. I think he changed everything about Ethereum on the sentiment.
I mean, he has done a good job as he does. I mean, I've seen him also do some terrible interviews, right? Like, so I think Tom Lee has been a force of nature in the way he goes on TV and talks about grandiose price targets and things. So I'm I give him credit because he can do stuff that I wouldn't do. Right. So he does stuff that you need to do to be the Pied Piper of an asset class or as a so so you got to give, but when you're right, you're at least on tape doing it. You do a lot of the same
S-
things. You got a lot of ideas. You put them out there, and I call it Kramer 2.0. And it's in a bull market. It's pretty fun to watch. But yeah, I think you got to give uh, Tom Lee cred. He's coming to Stocktoberfest. I'm going to give him some shit. He's going to be speaking. But, Joe Lubin, there's a bunch of people early on. Joe Lubin has got this other one. He's got a company that's already, even though he was like the co-founder and of Ethereum, Joe in New York, he's trailing. He's got that sharp link betting, and which is SBET, but it's trailing Bitminer. Um, so you should watch this one too because it's Joe Lubin's from Ethereum. He's the chairman, and he's the co-founder of Ethereum.
Well,
But
Howard, let me ask you this because you're bullish on the degeneracy theme. Do you
yeah,
think this falls under that umbrella?
yeah, I own in the index. I own Bitcoin, um, and I own Robinhood. I had sold my Coinbase up in the high threes. I'm looking to buy it back. So I've got my exposure in many ways through just Bitcoin directly and Robinhood. Ethereum to me is more about like the banking system, right? In the end, like as the treasury companies to me aren't degenerate, but I can see that you can't own everything in the degenerate economy. And good question, because what's fun about the degenerate economy, I can make it's a story that I can wrap around anything, right? Because
Hmm.
degenerate economy is like free time, culture, um, you know, making decisions through your network, being hooked on vaping, gambling. But it really comes down to that free time that the iPhone and apps and Uber and DoorDash have given you as a young person. And what do you do with that free time?
Hmm.
And so Ethereum is a stretch, but it would have been a great ad 6 months ago. What do you think?
I mean, I think it's I'm very green on crypto, as everyone knows. I'm a TradFi guy, but it's impossible to ignore how much I miss that boat. I
Yeah.
think that Bitcoin becoming as big as a asset as the silver and gold, I think permeates their presence forever into the financial institution. So whoever says it's a fugazi, a fad, like you're wrong. I think I'm
No, they're
absolutely
wrong.
wrong.
They're wrong. And so Yoni Asia Toro, what's his name from Ethereum who started it? Was 15 years old, and he was 2015 he was an intern at eToro building Ethereum, and Yoni paid him a few Bitcoin for the summer to come build that. And originally it was called colored coins. If you ask Yoni, Ethereum is just a different version of Bitcoin, and Yoni's vision of other blockchains, they'd all have just different color names, right? Like to differentiate them. Like if you really think about Ethereum, what a terrible branding name. 3 syllables, blah blah blah. But here we are, and I remember Stocktoberfest. Fred Wilson, who was one of the first person to chirp Ethereum into my ear, venture capitalist in New York, he came to Stocktoberfest and I did a fireside chat with him in 2017, and Ethereum was $36 and no one knew what the hell, at the Stocktoberfest thing, even though we're early on trends, um, people were pulling it up on whatever app that had Ethereum back then. And that was a hell of a shout out at $36 now that it's $4,600. So Fred hasn't sold. I think one of the most important things about Ethereum and Bitcoin is there's only a few whales that you need to follow. And they're not going to talk about it very often. The Joe Lubins and the Tom Lees now will talk about it every day, which makes it harder to hold. When someone's just talking about an asset all day and yelling out target prices, even though it's never been easier to buy Ethereum, it's never been harder to hold it. Versus the guys like um, Fred Wilson, who wrote about it a couple times, explained where it was going to be, explained the benefit of stable coins, which also is a big tailwind for Ethereum. And people go, "What should I do? What should I do?" And what is Fred saying to do? Nothing. Well, I'm like, why am I going to? The person who got me into the trade isn't selling it, so why am I selling it? So there's going to be a lot more noise, and there's going to be a lot more volatility as it gets up here near all time highs. So it's fun to see because it was written off for debt. Period.
Well,
End of
do
story.
you, do you think this is the beginning of the blow off top on the crypto chapter? Because usually, right now in the bull market, we're at that stage where we're waiting for that blow off top before the cyclicality starts to kick in. What's your thoughts on that?
Again, like I'm not in the Telegram groups. I'm on StockTwits seeing it, and here's what I see. I see a lot of bad behavior, a lot more trolling, a lot more bots recently, and I'm seeing you've got this two type market. Shay, you've got Google, which it's hard to argue that it could just be getting going, right? It's been an abuse, it's been an undertold, but it's been a poorly told story. I read a Tom Tenga's piece yesterday that Chrome's worth 5 to 800 billion, right? Like Perplexity offered 36 billion, which is double the value of Perplexity. So I look at Google and I'm like, wait a minute, okay, this company has 5 products, you know, without cloud that probably are worth the valuation of the company. And Google just hasn't cared to tell the story, so they've really lagged. And then you've got the government overhang of whatever all the trials are. And in a world where NVIDIA's been in there to kiss the ring. Tim Cook has been in there bringing gifts. Um, you haven't heard Google come into the and go negotiate out of their lawsuits, over the Apple stuff. So I'm saying, as a shareholder of Google, how do you feel? Like, I mean, I kind of like that they haven't done it because maybe they can get because the company's so good, maybe it'll go on a run without fucking bending over and kissing the ring. And I respect that at some level, but also I'm expecting them any day to be in the White House going, fucking drop this stupid, these stupid lawsuits that were a monopoly and blah 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 blah. So I think in a world where Google's about to break out for good reasons with great products, you also have the most insane penny stock and crypto behavior. And so in a degenerate economy where valuations both matter and don't matter, depending on who you ask and at what point of time, it's a very hard sentiment to read because you could go on Google and the QQQ and the SMH, but it feels underowned relative to how much speculation is going on in crypto and meme coins. So I'm seeing, I'm using some meme coin software apps, and the alerts, the amount of activity is like shooting through the roof. So as Bitcoin goes up and Ethereum goes up, people take some profits and they start shooting the moon and some meme coins and shit coins. And that's never a good sign, right? Because they're taking money out of like an asset that like um, Michael Saylor would say, what the fuck are you doing? But they're feeling flush and they're going to move it to an asset where one person's going to 10x their money and the rest of the people are going to lose all their money. So I would say like we're getting to the point where it feels like you should be a seller, not a buyer. The other thing is the VIX is back down to the lowest level of the year. So what I would like to say is the VIX can stay low. That doesn't mean the market's going to go down. But I prefer to really do my buying when the VIX is above 30. It hit 60 this year. So the reason you buy
Mhm.
you buy the VIX 60 is so that you can enjoy VIX 14. And so right now I see what's happening is a lot of people are enjoying VIX 14, but they didn't buy VIX 60. So as soon as the market drops 5%, they're like it's devastating to them. So I think you just have to just know your field position.
No, I mean, I want to get into Google as well, but after that, I want to talk about. I mean, before that, I want to talk about VIX. So I
Mhm.
think VIX is very important to know as just a component of your decision making. Do not let it be end all be all. But if the VIX is a 50 plus handle, I go all in on my cash.
Yeah.
That those are black swan events. Those are typically events that will generate a ton of FUD at a short amount of time that makes it feel like the world is about to be over and that there's no way we're going to turn it around.
Mhm.
Yen carry trade crisis, COVID event, tariff trade wars. Those are the last three 50 plus VIX scores. What has been the price action when that has
Yeah,
hit
if you
50
look at a
plus?
year from those, and I wrote about it when the VIX hit 60 in March and April, it's never comfortable. But the reason the reason the VIX is important, not when it's low, but when it's high, because it only happens maybe once a year, if it, but you need to train yourself to use leverage when no one else is using leverage, which is VIX 60. And the time to get off leverage, again, not if you hadn't, when you've bought VIX 60 and added to your portfolio at a time when everybody's losing, you can mess around a little more at VIX 14, right? Because you've already made the money, right? But if you're scared at VIX 60 and sell it, VIX 14 can be very dangerous, right? Because you've now taken all that extra money out of the market at the wrong time and now playing with your money in a market that's volatility will return. One thing about VIX 14 is it doesn't matter, you don't know when, but volatility will return. And so you just have to be a little more careful at VIX 14. Now, there's other people will tell you like market's all clear, VIX 14 is great, and I'm not arguing that it isn't. And I think VIX, like you said, is just one component of sentiment, but it means a lot when it's trending up above 30.
Well, also, guys, this game, stock market capitalism, is not meant to be easy. So like when things are so obvious, that's not that's not when I put
Yeah.
my foot on the gas pedal. I think we're all long term investors, or specifically, I am a very much a 5+ year investor. I like to add when there's blood in the water because that's where our alpha is made. Right
Yeah.
now, VIX at a 14 handle, we're at all time highs. Everyone feels like it's too easy to be making money. That's when the rug pulls usually occur. I don't think it's gonna. I'm not saying that we're gonna have a pullback right away, but typically when things are going so well that people want to quit their W-2 9 to 5 jobs because they make so much money trading, etc., that's when like things get ego checked a bit. And some black swan event occurs, a new variable that nobody can anticipate. Nobody knows, like even Howard and I can't call it out right now, comes to light and evens the playing field towards the mean. So I think it's really important to sober your reality a bit when the VIX is under 15. And also, hedging is cheap if you want to protect your 3 year gains on this insane rally you've had in the market.
Yeah, I mean, like like, let's go back to Tom Lee, who's super smart. Like, anybody who's been around this business that long and still invited back to TV, and obviously running a public company now, or chairman of a public company, he knows enough about the market, but he plays two roles, right? He's the CEO of a company that he has to promote and tell a story for, and he's an analyst selling subscriptions, and he's an entertainer in many ways because you're going on CNBC. So we live in this bifurcated world right now where you can get away with saying two things: valuations don't matter, and you'll get run over by people who look back. But we are also living in a time where valuations matter. Where do they matter? If you're an enterprise software company, or if you're athleisure and you're like Deckers and you have to sell into 40 countries and Trump's changing tariffs like they're a bingo card, go look at their stock prices. This is a vicious bear market for Nike, Lulu, um, and Deckers. So companies that like not the technology they use doesn't help them in the business that needs to happen in a high tariff world, right? And then also a very competitive world. Same with fast casual restaurants, right? Cava just imploded. You've got Chipotle's looking weak. There's just too much fast casual, right? In a world that's expensive, and in a world where like the fast casual product quality continues to drop and prices go up with tariffs and food prices and a little bit of inflation. So, the product's not that good as it was when fast casual was just launched as a thing. And so, within this bull market, there's already vicious, you know, bear markets. So I'm saying valuations do matter even in a moment where valuations don't matter. And where they don't matter right now, let's pull up Palantir. Let's pull up two stocks, Palantir and Hood, two favorites, right? If you could give me like a monthly, yeah, 5 year. So if we look at Palantir in April of this year, the stock hit its 200-day moving average, which, even in a bull market, because it's a blip, when the VIX hit 60 in April, Palantir was an $80 stock. It dipped into the 70s. And then it went through its own bear market from 100 to 50. When was that? This year. Yeah, $70. And then so it's been through its own long things. And what you have to remember about these great companies is once a year, even if they're having a great year, they touch their 200-day moving average. So when the VIX is 14 and I'm looking at Palantir, I have to trust that the markets eventually do their thing and bring that stock down to its 200-day moving average. And guess what the mood will be when that happens? It won't be good. And there'll be millions of reasons not to buy Palantir. If we go look at Robinhood, right, where valuation doesn't matter today, and we go back to 2022, it was trading at cash. Um, right? And it was just like people were selling the stock. I was almost at one point out of the stock because I couldn't see beyond, getting out of they were a child of that tech bear market, but it was trading at cash value.
Well, let me ask you this though: for how the 200-day moving average, Palantir has not been below that in over 2 years. They haven't even
Correct.
touched it. So
Well, but it did hit it, and that's when I bought it. If you look at my notes, I was buying it even though I thought it was overvalued in the April tariff crash. It was such a leading stock that those are the ones you want to add when the VIX is 60 and a stock is pulling down to a 200. That happens once a year. And it's not comfortable to do it because you're still going to be buying expensive stocks. But if you follow the markets well, you kind of have a game plan saying if this happens, here's the list of stocks I'm going to be looking at. And it happened this year with the tariff wars, and it was not comfortable buying because you didn't know what he was going to do the next day. But you know, he flinched because he was scared of the markets, and he wasn't scared of the markets. He has no money in the markets, Trump, but he was scared of the people yelling at him for being in the markets. So the markets just made Trump blink, and the tariffs were kind of pushed, kicked down the road, right? And I think at VIX 14 here, where the tariffs haven't really been decided and now they're actually being collected, and we don't really know the full effects other than what Trump tells you. I think you got to be a little bit more mental or crazy to be putting on the same positions that you were doing in April or May when Trump flinched. So, but then again, Shay, I'll tell you, Google looks fantastic, and Google's trailed Meta and Microsoft on the OpenAI story. And
well,
I still believe Gemini is going to probably win. I'm not doing it. I don't have any true factual base of that, but from my own use habits and watching people
well, I,
slowly use Gemini, I feel like they're not out of the game.
well, I think Gemini is. Here's the difficulty about Gemini. So I think that it's going to be impossible to predict, to quantify how valuable Gemini is because it's the connectivity tissue on all these workspace products that Google has under the umbrella. It's not a standalone product, really.
Mhm.
So when people say search is going to go away from AI, disagree. It's going to get probably a new competitor. It's going to be a duopoly. It's not going to be a cannibalization. But guess what won't go away? Google still owns your day. Google Calendar, Google Maps, Google the Gmail, like Google Docs, everything you use every single day.
Yeah,
Spoiler alert, it's Google.
and the
And what's
Android, and the Android.
yeah, and the Android and the Gemini is going to be so embedded to every single one of those products that when I mentioned that the greatest value for any super intelligence leader going forward is going to be four pillars. It's going to be the next gen brain. It's going to be the data, the distribution, and the hardware. Google is one of the few companies in the world that own all four, and the distribution that they have on that workspace
And
product is
Waymo, you've got Waymo.
yeah, Waymo too. But the distribution that they have, the value of that is unmatched on how they can improve the quality of their Gemini models
Yeah,
by owning that data. So I
sure.
think that right now, like
Oh, and YouTube. So no,
yeah,
but you're right. But what I'm saying is, yeah. How do you
but
package it?
this
You
this is the
what I
post I made where you can
do.
do the back of the math
Yeah, the
right
back
here.
of the math is you throw YouTube out at 700 billion in cloud, and you're almost at the 2 trillion. So now you got to throw in Gmail, Android, Waymo, Maps, Calendar. Even young people are using Calendar more. I see in college, I heard that everybody's using Calendar, and Calendar is one of the great products of all time because it's a boundary thing, right? Kids, it's a very powerful tool that, like, even my two young kids, I'm trying to say, guys, this is your life. You know what you put on your calendar is kind of like using your is kind of how you manage your time. Like learning how to block time for yourself, kind of like saving money. You know, if you get a paycheck, you're supposed to put was it 10% of that money? Pay yourself first, right? Put it in Bitcoin, put it in the QQQ. Same thing with your calendar. Like when you have a job, the second thing after your job hours is penciling in time for yourself, whether it's fitness, quiet time, media, friends. You know, the calendar is something you can truly control. So it's really an undervalued tool in terms of setting boundaries and life goals. The other thing about Google is the most important thing about Google, and the VCs are out explaining it. Mark Andreessen's out on the tour explaining it is AI is going to be an ad based product. for 90% of the population because it won't work. If you want to go mass consumer, and the proof is Netflix, which is going mass consumer, you're going to need an ad based product to reach the long tail of four great products. Okay. So, unlike enterprise products, at some point, if OpenAI wants to reach and be as profitable as like a Microsoft, they're going to have an ad based product. And who's better at ads, right? Gemini or OpenAI, and who's going to turn on who quickly? This is native to Apple. I mean, native to Gemini. So again, in a world where like a Mark Andreessen explains, or it's just your own eyes and using Netflix explain how many people use Netflix just with ads or Tubi TV. Ads are going to be a big part of AI, and Gemini is in a leading position to both monetize that and be trusted. So anyways, the whole story here is it's frothy, but VIX 14 doesn't mean the end of the world because there's still incredible companies and the market's doing its thing, meaning there's a whole swath of the market share that's truly, it could be a value trap, Nike, Lulu, Deckers, some restaurants, but they are valued. Like valuation does matter. They are no longer Salesforce. These are trading at their lowest, sales multiples and free cash flow multiples ever. And the S&P is at all-time highs. So we really do live in a market where valuations don't matter and valuations matter. And that's just the truth of just about any market that we've ever been in. Is if you really want to be a good analyst, you have to understand that the market is so big now and it's so broad that you can have vicious bear markets going on and vicious bull markets going on at the exact same time.
No, I absolutely agree with that, and I think that's really important to kind of keep in mind and have a fluid mentality. You can't be fixed. What was true 2 years ago is not true in the next couple of years, and you have to be very fluid on that. But Keith, you want to bring up that tweet that we were talking about, where that's a classic example where, for me, you guys know that I have a long-term growth portfolio, so I add to my high conviction winners. My biggest high conviction winners are the Rock Labs, Palantirs, Axons, CrowdStrikes, etc. These are companies that have gone re-rated pretty aggressively the past couple of years, and I put cash into my portfolio every month, and it's been building up because I have not seen, like what Howard and I were talking about earlier on the show, like I like to add when there's blood in the water, when the VIX is above 30, 40, 50, not when it's in the low teens, when things look too rosy. So what am I going to do with the capital? I'm not going to keep on the sidelines just to get that couple percent gains on having it there. I'm going to look for some opportunities in the market right now. And I think that, first off, the biggest, I'm treating this as a trading sleeve within my growth portfolio. So as soon as my high conviction names pull back to my buy range, I'm probably going to liquidate this. So this is just parking my cash. I think Novo Nordisk is a really interesting play right now where they have a re-rating of sorts from Lilly's poor data. And I think that now it's going to be up to Viking to come up with their data, see what their numbers are. If Viking disappoints, Novo is the go-to. If Viking doesn't disappoint, they still have a duopoly. And I think they are getting penalized from the new CEO picking a fight with an early disruptor in the space and Hims and Her Health by doing the lawsuits. I think that's one component. Also, they're just oversold in the daily charts. So I was like, I think this is a high quality name that's undervalued and oversold. I'll park my cash there. Monday.com. You guys saw me going over why I chose Monday yesterday on that Aerometer score, where they have a 30% discount to all their CRM peers in that space. Asana, Salesforce, HubSpot, all of them have a 30% premium on the Air score, which factors in the EV gross profit, revenue growth, free cash flow margins, creates an apple-to-apple metric. So I think the re-rating that Monday got in less than 1 day after their earnings report, which was fine, it was a good print. The reason they got tanked 30% was because the whole mid-tier CRM bucket is getting re-rated from that AI tsunami. Justified. It shouldn't be at 40 times free cash flow anymore, but trading at mid-20s when they have a Rule 40 score of 52 plus, I think that's too much too quick. Parking my cash there. United Health Group, It's an absolute mess there. I think that it's rare where you see a blue chip company like that just get penalized the way they've done on not just the fundamentals, but also the legislation and the legality of it. Like it's getting a perfect storm of just so much FUD that it gives me a dividend that my cash would have gone already if I kept in the brokerage. I got in at under 250 on this one. I was like, I think this is a safe place to park my cash, and I think there is a little overdrawn narrative on how screwed they are. Palo Alto, I think this name is just getting beaten down from that CyberArk acquisition. I think the market viewed that acquisition from a place of weakness, not strength, because their previous biggest acquisition was around 2 or 3 bill. This is going to be 25 billion. That's 10x. So something must be wrong under the hood if they have to acquire this aggressively. My take on it is they're seeing where the agentic AI future is going to be heading, and they need CyberArk's like identity component of that to fulfill the platformization angle. Yes, pricey tag, but they're calling out where the puck is heading and they want to position themselves accordingly. And I think right now, like if you're talking cybersecurity theme, which has one of my favorite themes out there because it's a combination of offensive, defensive, offensive, beneficiary on AI. AI is going to create a ton of data. What do you have to do with that data? Protect it. Defensibility of it. It's the stickiest line item of any CTO's budget. If we get any kind of recessionary behavior, they will not cut their cybersecurity buckets to save a couple of dollars. That's the worst thing you could do. So I think that this participates in offensive, defensive, and Palo Alto is a tier 1 cyber name. Like CrowdStrike's better because they can organically grow themselves without acquiring like a CyberArk. Palo Alto has not been shying away. They're adopting the Salesforce model back in the cloud era where they're going to land and expand through acquiring tools to sell the platformization angle. It's annoying because there's dilution synergy risk, but it's gone 30% in a matter of like 2 weeks. That's too much for a blue chip cyber name, in my opinion. GitLab and Elastic, you guys saw my Aerometer score yesterday. This is like a 40 to 50% discount from the other peers in that space for DevOps and the data software names. So I think this is purely a valuation play where I can dump some cash there, oversold in the daily chart, combined with very high M&A floor. Google is going to acquire GitLab eventually. World's worst kept secret. Elastic has that issue where their open source product search is so widely adopted that a lot of their AI native customers are essentially saying like, we'll take that and take it from here and create our own internal product that we don't have to use your managed services. Like we're just going to use our open source product, do our thing to create a competing product with your managed services that does 70% of what you do. And we'll be fine with that because we own the whole thing now. That is the AI. That's a classic example of the AI tsunami is coming. But for this name, it's very undervalued. And I think that maybe there's a place for them in the managed services world, but I don't see it, but also high acquisition targets. So either way, that's kind of the explanation of like, rather than having 100K just sitting in my account doing nothing like it's been, I think I want to make it go to work on some oversold names. And that's kind of the philosophy around why I'm doing that. And it is rentals, not long-term ownership. And yeah, what are your thoughts on that, Howard?
Man, you're working hard. I would have just QQQ'd that and hoped for a spike to VIX 60 so you could buy some more QQQ. It's funny. I got a call from my buddy, uh, CEO, sold his company to Facebook. I have a lot of very aggressive friends who, if they believe in a trend, they'll just buy the leverage version. So he called me yesterday. He goes, "What do you think of ROM, which is like double QQQ?" He's owned it forever, taking the drawdowns, and I'm like, I've had such a bad experience once owning one of these leveraged ETFs, right? Because the decay happened. But he's just held it through and through, and it's just an incredible performer. And I gave him the same story I would tell you is like, I buy QQQ. Probably should have been doing it with SMH over the years. That and I'm older. Believe me, like 10 years ago, I was doing what you were doing with spare money. And then when VIX 60 happens, I pick up all the benefit I would have had while everybody in the ROM that owns ROM is in a 50% drawdown. I just add a little QQQ at VIX 60, and without all the headaches and leverage and the worry that like one more shitty day and ROM could just shut itself down because of the leverage. Um, I've just matched what the ROM portfolio is doing with half the drawdown, right? And no risk of failure because it's not a leverage portfolio. So, my general point is do less work because it's very hard to beat the indexes. And then in good markets, you know, just stick with winners. And but you'll learn. I would say, listen, and I hope it doesn't work for you so that you give up on that strategy. At the same time, I'm not rooting against you because I think those are good. Those are all good reasons for doing what you're doing, as long as you're, But you've just added extra work to your life, is what I'm saying. And I think the knowledge that you get from knowing the stories of 10 more companies, because I've owned Elastic in the past and I think it was a great story, but like it's just hasn't executed. I don't know if it's technology passing it by. I mean, we use Elastic at StockTwits, but a lot of those stocks you mentioned, um, they never gain back their momentum. So what I will always worry about in broken momentum stocks is like, what's the catalyst for it to regain its momentum? But it happens. So I mean, it's cool that you're doing it, and that's just my opinion. There's a million ways to trade. As I get older, I'm inclined more to use direct indexing and indexing.
Yeah, I mean, you guys heard the reasonings on why I did it. It's
Yeah,
more rentals. It's a matter
I
of
love it.
weeks, not months. But yeah, be cautious. Don't follow blindly. I think that it's really important to know why you're doing what you do and not to follow Shy the schmuck Boloor potentially on a. I might lose 5% rather than just keeping in there and gaining that's risk free 3%. That might be
Yeah.
absolutely true, but
Here's another thing I like to tell the youngins is, you really got to decide what you want out of the market, right? Like, so in a world where the QQQ has beaten even the best venture capitalists since 2017, from YC on down, they're all bragging about their portfolios. But and I'm not saying any of this continues, right? It's the same reason when you go hear Michael Saylor speak, he really gets you close to going smacking your forehead and going, I really am an idiot, right? Like, why didn't I just buy Bitcoin? Because it's outperformed every other asset and I don't even have to do work. But I think the most important takeaway from indexing and what Michael Saylor's done is like, how much work do you want to do? Because if the Nasdaq's giving you like 16% to 20% the last 20 years, will it continue to do that? Who knows? Like, say it drops to 12 over 10-year periods or 13. It's a pretty good return on capital, right? Like, as you get older, you'll see that. And right now you're a time billionaire and I'm a time thousandaire because you're in your 30s and I'm in 60. So we should be thinking differently. Right. And I don't want to tell
mhm.
people how to manage their portfolio. But really, before you go down the path that Shai's doing or I did back then, is like have to start valuing your time. Right. It just goes back to the Google Calendar. And like, what should you be doing with that spare time? Not just the 5%, but the spare time. Now, if this is your lifestyle and you love it, and I think you do, and you want to do the work, but you also have to value your time. And then how much should I be trying to beat the market? Not just like beat it by 1%, but if you're going to invest your time, the reason I have the degenerate economy index is like, I'm doing this to double or triple what the market returns could be, because otherwise it's just not worth my time, right? Meaning I'm going to be fine earning 14, 16, 17% doing QQQ the rest of my life. So if I am going to do it, I am going to go really narrow. I'm going to pick this catalyst and stories I understand the most. And they probably aren't tied perfectly to fundamentals, because how could they be? Because they're momentum companies. But I really am trying to double the returns that I get, not just win by a percent. So I think you have to have that right frame of mind to go beyond indexing, because people aren't valuing their time enough. So free advice
Very
from
well
an old
said.
man.
Very
From an
well
old man.
said.
All right, what else
Uh,
do we got?
no, I think we're at the top of the hour right now. I don't think there's much. The market's kind of doing hasn't moved since pre-market. AMD is exploding. It's past 185.
What is?
Um, AMD.
Oh, AMD. Yeah,
Yeah.
I think that's an interesting story. AMD, Nvidia. You've got a license fee being paid to the U.S. government in what looks like a Elizabeth Warren couldn't have come up with a more socialistic way to skim money from one of like Nvidia and AMD. But the most important part of the story of the 15% tax for China that's going to get lost in this, what's the stock actually doing? What are the shareholders doing in response to this? And you know what they're doing? They're not fucking giving a flying fuck. And so, no matter what the reporters are writing, and no matter what we're calling this politically, assuming, looking at your and assuming the government collects this money and spends it wisely, two big assumptions that we know are not going to happen. But the market's saying, pretty good idea. They're not punishing AMD or Nvidia for like giving away 15% of their revenue to get China. Now, there's a whole slew of unintended circumstances that other companies like, how am I going to do that? Like, how do I get even on, do I have to go, do I have to call Chamath to get on the All In podcast to get a meeting with the president? And, is it going to be 18% for me and my chip company? So I'm saying, I'm not judging, like, who knows the unintended consequences, but short term, pretty brilliant. If you fart all day, a couple don't smell. And so Trump has come up with this idea to tax a couple of farts he floated this week, and they're pretty good ideas. They're very Bernie Sanders-ish ideas, but he's figured out a way to skim 15% straight to the government. So that is interesting to me. And the most interesting thing, Shay, about it is the stocks haven't flinched. They're not getting penalized for just giving up 15% of their revenue.
No, I agree. Well, it's kind of crazy, and they are becoming the inference engine that a lot markets now starting to reprice. Where quality doesn't matter as much.
AMD was $75 and written off less than 6 months ago, like Ethereum.
Exactly.
So I'm saying you can't follow everything, but you have to really look for panic and greed, and it's happening all the time. And your best bets to make money are in great companies when the market's just kind of sold them off. And very hard to do. I prefer to wait for the whole market to sell off and buy the strongest stocks into that market. It's just something that I've done over, the last 20 years that has really worked for me. And I think it usually takes, I don't know how long you've been doing this, Shy. I think it usually takes about 10ish years to truly get in touch with your DNA and your risk.
10,000 hours. Yeah, it takes 10,000 hours, however long it takes to get there. Malcolm Gladwell, best book if you guys haven't read that. But yeah, I have to hop off now. We're at the top of the hour though. But thanks, great episode. Thanks for filling in for Katie Howard. Be prepared. VIX at 14 handle, guys. Like, just be prepared for some potential volatility.
Defense. It's okay to play a little defense for a week.
Totally. Nothing wrong with that. But thanks.
See you guys.